For example,
Yeah.
the price of banana is in for consumer like is 2 yuan per chin, right? Per 500 grams. But if you are a dealer, you will get it for 1.5, right? If you want to buy more, like you want to buy one truck of banana, maybe it is $1 per chin. So these are all exchange rates, but available to different parties. So consumer rate, if immediate rate, you want to buy one chin immediate, this is called spot. So this is for dealer because they want to buy more, like 2 3 2 3, maybe not 2 3, like 10 chin, 15 chin, 20 chin, 100 chin. But this is for the agents one, or those who buy big loads of truck like interbank rate. So they buy in trucks rather than in one chin, two chin, right? So similarly, that strategies are also available in exchange market, because exchange market, the product is literally the currencies, not the bananas. So just switch bananas with currencies, right? In that case, if you want to buy more in lot, the price is going to decrease. That is the exchange rate, but we call this the exchange, because those who are dealers, they have special discount because their transaction are big transaction. Interbank rates, in which no dealers are allowed, only bank to bank transaction, they are in millions of dollars, millions of currencies are going to bought and sold, and also on hourly basis, or maybe on minute by minute, second by second. So that's why they have reduced rate, right, Haley?
Okay.
Okay, so let's talk more about the spot market. So in spot market, mostly dollars are quoted. Why? Because dollar is commonly accepted medium of exchange in the spot market. Why? Because if you see the history of dollar and its stability after the World War, even after the World War One, it is still stable. Now you can say that you look, the price of $1 in 1950s, and look at the price of dollar right now. Of course, but it is increase or decrease on on stable basis. Plus, it's the most liquid currencies. Why? Because most of the world's agreements are denominated in dollars. Right now, the things are changing. We have regional corporations which say that, okay, we are not going to involve dollars. We are going to involve our own currencies. But still, that portion is very small. Look at the deals of oils. So world oil market always deals in dollars. So look at its impact. They are in billions of dollars, like 500, 300, 400 billions of dollars every day are exchanged. So in this case, so mostly dollars are traded. Spot market time zones. Foreign exchange trading is conducted only during normal business days, right? For example, even though you are in China and in US, the time difference is huge, but even then, the spot market where it is located, it will follow its timing. That's it. After that, you cannot buy that one. So the network is switched off. Although nowadays we are having a lot of softwares, online targets, and all that stuff, but still there are some times when they say that, okay, on weekends this network is going down, we are not doing any kind of transaction during weekends or during holidays. Or look at the Shanghai Stock Exchange or the Shanghai Foreign Exchange during the national holidays. Mostly it will be closed, or only deals with the already established market, or maybe dealing with just dollar, that's it, not other market, right? So spot market, which you just want to convert immediately, it has the timing as well. Even though the network is, even though for 24 hours available, even then it has some limitation. You cannot buy on weekends. Then you need to go some dealers to buy on weekend something. Spot market liquidity. What does it mean by liquidity? Liquidity means ability to convert into cash, and cash according to your desired currency. Remember that one. Now the For me, cash is dollar. For you, maybe cash is renminbi. For others, maybe cash is the Thai baht, right? Indonesian rupiah, right? So ability to convert. So ability of conversion is very high in spot market. Why? Because there are many buyers, many sellers who are having transaction in spot market, immediate market. So the time it takes to convert into other currency, it is very, very less. So liquidity of dealer is high or liquidity of spot market is high. Of course, there are less dealers than the spot market. Then of course the liquidity is high in spot market than the dealer market. And over the counter market, it is even more illiquid, right? Because you have customization. I need $105, right? So you're according to your customization. In that case, liquidity is higher. So what do we mean by liquidity? I think after this slide we will talk about more. Okay, so attributes of the banks that provide foreign exchange. What are the characteristics of the banks that provide the the foreign exchange? So number one, competitiveness. So nowadays you can find a lot of banks. Even in Shanghai, you can find a lot of banks. Even in your own area where you live, you can find more than 10 banks. So they need to be competitive. So when they need to be competitive, they need to offer many products. Plus, is it a very lucrative for them to provide foreign exchange as well, rather opening accounts, saving your money with the banks, and also they are opening the foreign exchange window? Look at that. A saving of 1 cent per unit of the order of 1 million will give you immediately or in a short period of time $10,000. They just requested from the head office or the person who holds the dollar 1 million, and they just transact that dollar $1 million to other party and just take a commission of $10,000. And this is just one customer. And banks has thousands of customers. So this is just with minimal effort they are getting huge amount of profits. So now you wonder why the banks are having so much profits even though this is recession, world economy is not going good. So you see the bank's profit, it's skyrocketing because of these transactions as well. The second one is special relationship with the bank. If you are a good customer, right, or you have a big factory with the bank, you can give all your cash management, your foreign account remittance to the bank. You can nominate that one, right? Bank can perform, okay, your Chinese clients already paid us. You gave the client the bank account number and you set the Chinese transfer to this bank. So cash is coming to the business. This is good for the banking industry as well. So you take they just charge you for the management services, cash management services, and also they can be, they can make a special effort to obtain for you even hard to find currencies. For example, if somebody wants to buy, something from Venezuela, and the Venezuela buyer seller says that okay, I will only consider the Venezuelan dollar. That's it. Sorry, Venezuelan pesos. So when you cannot find in your area who has the Venezuelan pesos, so because you are a very prime customer to the bank, you can ask the bank can find or this kind of arrangement that he can give you Venezuelan pesos. Right? Third one, the speed of execution. So speed of execution is very high among the banks rather than the other parties. So a corporate will prefer a bank that conducts transaction promptly and handles any paperwork properly. So you can find these kind of stuff in banks as why? Because banking has more branch, plus wherever you are, the banks cannot trust the individual person. Banks trust the banks. So Shanghai banks or HSBC or ICBC in China will be trusting the HSBC in America because they are big institutions rather than they are trusting Mr. Jamal, right? Plus, speed of execution is high over there because they have specialized network, their own internet, intranet, and all those stuff. So their speed of conducting the transaction will be also high. So when they already have this kind of platform, then opening a foreign exchange window is literally very easy for them. Rather, if I open a channel of my services of foreign exchange and I install all those stuff, rather I just bought banking services to do for me, and that will be very cheap for me as well. Plus, banks advise about current market condition. Now the banks are becoming more global, oriented, global village oriented. So everything you can think of right now, the banks can provide. Previously, we have a separate banking institution for this kind of stuff, right? But now banks have different kind of departments. For example, asset management department, risk management department, also currency management department. So banks are now also getting to be more competitive and also giving you insight about the currency. So if you purchase, these services to be more informed, then they will give you the market condition analysis for you as well. What's going on in 6 months? What will be the value of dollar? What will be the value of yen, the euro, pound? What's going on with this country? Whether you should, uh, have this kind of arrangement to pay in advance or pay later. So why? Because currency is going down. It's better right now or maybe late. So they're going to give you market condition as well, plus forecasting as well. If you need a plan after 6 months, look at that. You need to buy dollars right now or after 6 months. At what rate? Either you need to fix the rate something, or either you just let it open. So what happens if the dollar rate start rising and you need $1 million to buy plant machinery after 6 months, but you said it will take $1 million, but due to currency appreciation, now it will be taking $1.2 million. And then you realize, okay, I wish I could have this kind of analysis and I could maintain this kind of currency risk, right? So the banks are also providing these kind of services. So this is just like you can say that a huge amount of revenues they can get from banks, because banks prime issue is handling cash. So why don't so it's very easy for them to establish the foreign currency departments as well. Why? Because they are already managing the cash. So it will be very easy for them to recruit these kind of persons who can give insight, the analyst. And also, naturally, if I want some kind of cash management issue, I will always talk about or think about the banks. So this also give some positive attributes to the banks and also give the banks huge amount of profits. Right, guys? Understanding? Fabian, Haley, Kathleen, Crystal, Marilyn,
Understand?
Locha,
Yes.
Yes.
Philip, Not, Ping Ping. Okay.
Yeah.
And now the really, the numerical questions start coming up. So before we were talking about a lot of, discussion, definition, concepts, and that's it. So that was a really dry from my side. So now let's do some interesting stuff.